Hi everybody and welcome back to my channel. It is Wednesday the 4th of January 2023 as I'm recording this video, so Happy New Year. It's the first video that I'm sharing with you this year and I hope you all have a fantastic 23. A few weeks ago I shared a video with you talking about the fact that I am undergoing the mentorship program by ICT Inner Circle Trader, which is, if you've not heard of it before, one of the most talked about educational resources in the Forex market today. Now, this mentorship series is a completely free series. It's available to watch on YouTube. I will include a link to it below, and so far so good. In fact, I actually had one of my best winners ever this week, where I made 4 times my initial risk on the trade and I experienced practically zero drawdown during the process. In fact, the winner turned out to be that good that it actually moved 10 times what I was risking. So there's definitely potential for more winnings there. And I want to share with you that trade breakdown in just a moment on the charts. But if you are new to the Forex market, if you're new to trading, and if you're new to my channel, my name is Emily and on Mindflow Trading, I share my journey as I grow and develop as a Forex trader. I've been trading for just over 4 years now. I originally started trading the US stock market. I have traded a variety of different markets and a variety of different strategies. And at the moment I've landed into the Forex market, where I am currently undertaking a challenge with the prop firm, the 5 Percenters. The 5 Percenters are a professional company whereby if you pass one of their trading challenges, you can actually gain access to trading their company capital. So you can essentially have a large account to trade and you split the profits with them. I have created a separate video with more information on the 5 Percenters if you want to check that out below. And I do share some videos of my progress with them as well. So make sure you subscribe to the channel so that you can see how I'm going with that. I don't know if you guys can hear that. It's super windy today. I'm so glad that I'm not still living on the narrow boat. Sending out much gratitude to the universe for my new home, which I am loving. So if you want to check out this trade where I have utilized buy stop liquidity to be able to profit from EURUSD, then follow along with me and let's jump onto the charts. Before I get into this, I just want to clarify what exactly it is I'm doing at the moment with ICT. So I started the ICT Mentorship Program for 2022 last December of 22. And I got about 9 videos into that series. I was really starting to get into the way that he uses the market and analyzes price. And ICT have just literally started bringing out a new mentorship program for this year. And I watched the first video out of interest, the intro, whereby Michael basically explains where to start on his channel if you want to be able to utilize his concepts. And his mentorship programs for 22 and 23 focus on the mini futures, whereas, as you guys know, I focus on the Forex market. So I've actually altered what I've been studying with him because he does have a better suited playlist for learning how to trade his concepts applied to the Forex market. And that is what I am studying now. Is the Market Maker Primer course. So if you yourself are currently learning ICT concepts or you do trade using the ICT concepts, I definitely invite you to comment on this video. It'd be really great to have your feedback to see if you think I'm on the right lines of how I've taken this trade. If you can see what I've seen or if I've missed something that you can see, let me know in the comments below. And if you haven't taken any ICT but you want to learn more, as I said, check out his YouTube channel because that's where all the educational content is. But here is the trade I took on EURUSD. So basically, looking on the larger time frame, for this I'm using a top-down analysis approach of 4 hour to 1 hour to 15 minutes. So the 4 hour time frame is what I've used to look at the overall flow of the market, which, as we can see very clearly, has been trending up, making higher highs and higher lows. So ordinarily I would be following this trend, but what I was really interested about that I spotted was the fact that it, in most recent price action here, made a double top. I had one attempt here, and it had another attempt here. And then price pushed up with a large bullish momentum candle and it came back down, it broke back in. And using the way of thinking, the ICT approach, I was thinking to myself that above this level and above this level will be loads of buy stops. So people would have gone short here, they would have gone short here, and they would have stops above this level here. And I thought that this was a buy stop hunt, a push move up to activate those stop orders to create some liquidity and movement in the market. And then as price broke back down, closing underneath this little range here, that's where I thought it'd be a good place to look for a short. So I dropped down to the 1 hour time frame, and this was mainly to see if I could identify an area to place a trade. Now zooming in on close price action here, I was quite interested in the flow of price as it was pushing up, come down here, made a little support level here, and it made the new high, and then it started to break down lower and it broke through this little support with some strong bearish momentum, and that's when I thought that it was ready for a short. And it also looks a little bit like a head and shoulders pattern, so you can see here that this would be the last attempt of price to push up. If we got some kind of rejection in this area, then I would be looking to basically look for that move. That was what my trade plan was on the 1 hour time frame. So to find my exact place for an entry, I then dropped to the 15-minute time frame. Now, I did something that you probably shouldn't do, but I did it and it worked out. So it was late at night, I was studying the ICT concepts, I finished the class, and then I loaded up the chart for EURUSD, basically just to explore, to have a look, to see if I could see anything that I'd learned in that class. And that was when I saw the setup forming. So it was actually just around about 10 o'clock at night, just after that closing 4 hour candle. So it was quite a late trade for me. I don't usually trade at this time, but when I saw the setup forming, I thought to myself, was this the best time of day for me to take this trade? Did it make sense? And it did make sense, but because I had those doubts, I just decided to reduce my risk on the account. So I risked a little bit less than I ordinarily would do, just to account for the fact that I felt a bit uncomfortable with the trade to begin with, but I still wanted to have a go. So I took less risk, I jumped on the 50-minute time frame, and I looked for a place for an entry. And this orange area here is where I identified the fair value gap. So this large bearish candle where momentum came in, price dropped down, and the candle before that and the candle after that, I marked the low of the candle prior to that and the high of the candle after it. And this is where we had a big gap down in price, where out of these three candles, nothing overlapped in this area, creating the fair value gap. I thought that if price pushed up to this area, it would be a really good place for a short. So I was watching price, I was watching it just sort of do its thing, and then this candle was very interesting. It was 11:45, and this 50-minute candle was pushing up, and in real time, as it was pushing up, as it got to the top of this fair value gap, it started to create this wick rejection, and it started to come down. And I decided to sell there by market, and it was totally uncomfortable, the feeling was, because price was pushing up, and at the time, as you can imagine, this whole area was a big bullish candle. So it felt very uncomfortable for me to really sell as price was up. But it turned out to be the best thing that I did, because it created this beautiful big bearish wick rejection, rejecting that fair value gap, and I was already into the trade at this point. After that wick rejection, I basically turned the charts off, because I felt that that was really nice confirmation that I'd gotten in, and I let it do its thing. And during the night, as I was asleep, this is what price did. So I woke up the next morning, I did my usual routine, looking after my little one, getting him up, getting him dressed, changed, getting him fed, getting myself up, dressed, changed and fed, you know, all the usual family stuff you do in the morning. So I didn't get onto the chart straight away, but when I did look, it was probably around about this time here as price was pushing down, which is obviously a really nice feeling to wake up in the morning and see price pretty much down here close to target. Now, I did have that split second before it hit my profit target, where I thought that if I zoom out here, I thought there was a chance that price would definitely go to the bottom of that initial range on the 4 hour time frame, which would have been just over 6 hours. So I was very tempted to extend my target, but given the nature of the trade, I didn't really want to alter it. I wanted to just let it do its thing, so I left it alone. And it immediately hit my target. So I did make 4 times my risk, which is brilliant. It went down to that range, as I thought it may do. But then as the day progressed, it continued to drop, all the way down to that red line that I drew, which was a resistance level on the 4 hourly time frame. If I just jump back to that chart, that's where we had the initial jump up to begin with. So in the same day, it dropped down to my target, and it continued all the way down there. So if I had used a 4-hour time frame for an extended target and then perhaps just trailed a profit stop, I could have ended up with up to 10R profit, which obviously would have been fantastic. And it's a lesson, and for me, it is a lot of inspiration to show that there is definitely something in all these ICT concepts, that there's definitely a way to make really good money whilst managing risk. And although this was an uncomfortable trade given the time of night, look at the drawdown. There's like no drawdown there at all. I literally was triggered into trade. It retested my entry, so if I missed the first one, there was another opportunity there to get short, and it just fell to target. These are the sort of trades that don't happen all the time, but they are beautiful textbook trades where you get in, you suffer no drawdown, price drops to target. So fortunately, I did take that trade in my account with the 5%ers, but as I said at the beginning, I took it using a reduced risk. So although it was 4 times my initial risk, given my usual risk on the account, it was the equivalent of a 2R win. So it was still a nice winner, and hopefully I'm going to get some more of those. But I am really curious what you guys think of the trade yourselves. If you would have done anything a bit differently, if you've spotted something maybe I've missed, do let me know in the comments below. Meanwhile, I hope that you've had a great first week of 2023. If you've enjoyed this video, do let me know by hitting that like button, and I will know to create more videos like this, sharing my journey with ICT. And make sure you subscribe to the channel if you're not already subscribed, and I'll catch you in my next video. Thanks for watching. Bye.